Are you ready for Housing Boom 2.0? Folks, the other day, Grant Cardone was on one of the news channels talking about Housing Boom 2.0. And yes, folks, we are talking single family homes, according to Grant Cardone, are about to go higher. Why does he think that? According to Grant, he believes that the Federal Reserve will get the federal funds rate, which is currently sitting at 4%. Grant believes that the federal funds rate will be 2.5% by June. By June of 2026. This will obviously be after Jerome Powell's term is up. But yes, with the Fed funds rates going to 2.5%, Grant believes that money currently sitting on the sidelines, currently in safe havens, will start to move, start to be invested, start to be spent. Again, Grant also believes that with the federal funds rate going to 2.5%, that small and medium-sized businesses will re-engage with borrowing and investing. And then, if we talk about what President Trump could potentially do for the housing emergency, we could see demand side or demand oriented incentives like tax incentives or rebates or credits or whatnot. Again, according to Grant Cardone, we are on the cusp of Housing Boom 2.0. Let me know in the comments below. Do you see it coming? Could you see it possibly happening? Or is this maybe just somebody talking his own book? Let's talk about next week, what is coming for a lot of discussions. And boy, I do not recall a week where we had so many Fed presidents talking. And this is important because I believe the Federal Reserve today is a mess. I frankly find it very hard to believe that the vote was 11-1. I think that's poppycock. I think that's theater. I think it's garbage. I think if the Fed presidents were given the true serum, we might have 3 or 4 camps in the Federal Reserve. We have it clearly one Fed president believes we should be raising rates. We saw that in the dot plot. On the other extreme, we have somebody expecting 6 cuts, and we have everybody in between. We are going to get, let me count it up, 5, 10, 13, 14, 15 different Fed presidents talking next week, starting on Monday. On Monday, we have no less than 5 Fed presidents speaking. And why is this important? We got to know who's who. Who's concerned about inflation, tariffs? Who's concerned about the job market? Who thinks we should raise rates? Who thinks we should cut drastically? We got to figure out who's who in the zoo so we can watch them as we move forward. On Tuesday, we go and have 3 Fed speakers, plus we will get S&P services and manufacturing PMI. What is going on in our services and manufacturing industry? On Wednesday, we will get 1 Fed president speaking and new home sales. What is going on in new homes? So again, it will be interesting to see if we are below last month or not. Thursday, again, back to 5 Fed presidents speaking. And the big one for the week, existing home sales. Again, folks, if you are tracking what I am forecasting, this report, which will be September, 25th, something like that, will be for August. My call, and I've been very clear on this, August is the bottom. August is the most ugly number. And it looks like experts agree, which I did not expect. Usually the experts and I disagree. Last month, just so you remember, we did just north of 4 million. We did 4.01. This month, the experts are calling for 3.95, which would be a cycle low. And sitting here this morning thinking about it, I will actually take the under. I think we are going to post a number lower than 395. And then for my big call, September, which will be reported in 30 or 31 days, I'm calling for a rebound. So again, we'll see if I'm right or if I am wrong. Again, this is on transactions. And then on Friday, we will get the third and final inflation reading, also known as PCE. PCE headline is expected to uptick to 2.7 from 2.6. Core is once again expected to stay flat at 2.9, so just below 3%. And then on Friday, we will also get consumer sentiment. Now for some Fed speak. We got the newest Fed president, Moran. He said, I see rate cuts continuing for the next several months. So again, Mirian was the one Fed president who voted for 50. He was the dissenter in this meeting, and he is on record saying he sees a series of 50s. And this is what he said. Getting to neutral rate, which again, no one knows what neutral is, but it's lower than where we are today. Getting to neutral rate a half a point at a time is reasonable. So again, Miriam is trying to paint a picture that we should go quickly. We should stop dicking around with quarters, and we should just get to neutral. That is your newest Fed president. What did Fed President Daly out of San Francisco have to say? We did a rate cut to try and support the labor market. Part of job slowing is about U.S. economy outlook, which again is an interesting take. Basically saying the job market is slowing down because businesses aren't investing. This actually kind of goes back to what Grant Cardone was saying at the beginning. If the Fed gets the Fed funds rate to 2.5%, again, 1.5% lower today or 6 cuts, will that be enough to incentivize borrowing? Now, again, we should always remember the Fed only controls the overnight rate. It has influence out to the 2-year, but the long end, the 10 and the 30-year, doesn't really matter what the Fed does. It matters, but not a lot. SoFi investment chief calling out the Fed, much like I've tried to do in the last 48 hours. SoFi's investment chief, something isn't adding up in the dot plot. I agree. I think the dot plot in the message was a complete fabrication, and they do not tie out. According to the investment chief, the Fed believes that the economy will grow through 2028. Unemployment rate will fall. Why would the Fed cut in that environment? You got to ask yourself, what's the Fed really saying? What's their messaging? What are they really doing? As we all know on this channel, Lennar, home builder Lennar, is being very aggressive. They have said pace over profit. And boy, are they serious. They now are taking such a large hit on profit, aka incentives are 14.3%. That's the average. 14.3%. So if you are looking to buy a Lennar home, don't you dare pay list price. They are telling you that their average discount is 14.3%. That's the average. That means some people were getting 20%. And again, remember, if you know my story, I was trying to buy 3 Lennar homes at 21% discount. I got them to accept 19%. And then because I kept negotiating, I lost out because they were sold to somebody else. So again, sometimes it pays just to do good enough. So I learned my lesson. So incentives are 14.3% and gross margin is down 17.5%. Again, pace over profit shown in their earnings statement. Commercial mortgage-backed securities are worse than the GFC. Yes. Delinquency rates now are 11.7% across the commercial mortgage-backed securities. That is above the peak of 10.7%. Where the pain obviously is being felt is in office. However, multifamily, right, the land of syndicators, the land of overpay with bridge debt, is now sitting at 6.9%, which is the second highest grouping of mortgage-backed security delinquencies behind office. Just for comparison, back in 2022, the delinquency rate was only 1.6%. The multifamily space is most important to commercial-backed securities because it is the largest bucket. The total bucket of commercial-backed securities is $2.2 trillion. 2.2 trillion. So my simple math says if you multiply 2.2 trillion by 7%, again, just doing easy math, you're at what, 154 billion dollars? Damn, that's a lot. 154 billion. Woo! That's a lot of pain coming, but we have been telling you about that for quite some time. Don't forget, folks, that if you are part of my school community, we are going live at 8 a.m., just a live Q&A, you, me, and hopefully 30 or 50 of our friends talking shop, talking real estate, talking economy, health journey, whatever you want. Again, let's welcome some new people to school. Austin, Joe, Raj, and Nicole. Again, go ahead and introduce yourself. Don't forget to check out the calendar for all the accountability groups, my Sunday live streams anytime I'm not traveling. So again, 19 minutes, I will go live inside school. And we had 2 more people buy tickets to Vegas. I want to thank Eli and Delonta. Thank you for buying your tickets. I will be reaching out to give you $100 in credit on Teachable and to request your address so I can mail you an autographed copy of one of my books. And again, if you buy 2 tickets, you get both books. If you buy 1, you can pick whatever you would like. Ray Dalio out on the Newswire talking about the world. The world is running out of interest in U.S. debt. We are seeing that in interesting areas like gold. Gold now is held on balance sheets of countries more than the U.S. Treasury. Some of that shows appetite, but also some of that shows just the sheer rise in gold. So lots and lots of stuff going on, folks. Again, folks, let me know what you think. Do you think we are on the cusp? Actually, let me ask the question differently. Do you think there are a set of things that could happen between now and, say, June of 2026, so 9 months, that could reignite the housing market? Do you think it's possible? I want to hear what you guys have to say. Leave comments below. I will be talking to you in school. Get your tickets to Vegas. Love to see you there. And of course, don't forget to try Steadily, the sponsor of the Daily Financial News. They are landlord insurance and only landlord insurance. We all know that insurance rates are going up, up, up. So it behooves you to get a quote and see if you can get a better rate and better coverage. Again, in my personal experience, they help out between 60 and 70% of the time. Other times, I already have good coverage, so I'll just stay where I am. Thanks, folks. Take care. Later.